particularly the 30-year. I think the 30-year is standing out as particularly good value right now.
Yeah, and Sally, just on that manufacturing index, do you think that changes the outlook for policy? And, you know, we also had good numbers from China on manufacturing.
Yeah, that's right. I mean, the PMIs sort of globally are probably surprised on the upside a little bit, and JP Morgan's global PMI, which comes out later this week, is expected to sort of actually tick up, you know, and that was, I guess, relative to expectations that it would drop a little bit further. So it sort of tells me that maybe the risk is that the global industrial production cycle is perhaps bottoming a little bit sooner than people thought, and that should actually be a positive thing for risky assets. For the Fed, I don't think it really matters that much. You know, inflation is a lagging indicator, so the disinflation we're seeing at the moment is still a response to that big negative output gap the US was running. And, you know, effectively the Fed has told us that they're going to target above trend growth in the US, and we've got a long way to go before we get there. You know, we actually think, you know, on average the US is going to only achieve trend growth next year in 2011. So it's really going to be, you know, on our forecast at least 2012 before they get above trend growth, which means that you're probably not going to get much of a turn in the inflation cycle, you know, well into sort of late 12, early 2013. So it could be a long period of time before the Fed sees some joy on the inflation front. And until they do, because the risks are very, very asymmetric, I don't think it changes the outlook for policy at all. And, you know, the one thing the Fed is going to be very mindful of is not sort of leaning into any inflation uptick too prematurely. The worst thing they can do is sort of get the outcome they want, i.e. we stop the disinflation, actually generate some inflation, and then if they lean into that too quickly, that'll just be a disaster. So I suspect it means that, you know, the whole QE2 story is going to go on for some time.
Sally, you were also saying before that, you know, Ben Bernanke rarely disappoints markets. The same wouldn't necessarily be said for Glenn Stevens. If anything, he likes to keep them on the back foot and constantly, I guess, surprise. So on that measure alone, what will play out in their thinking principally today? Because what's changed in the month? We keep asking this question. I mean, what has really changed from it being a line ball this month?
Yeah, a couple of things, I think. I mean, the first one being, you know, those good employment numbers we got a couple of weeks ago. They were very strong. And the other thing that's happened since the October board meeting is that I think the tail risks around the global economy have actually receded quite significantly. It's pretty clear that things are looking good in China, and even in the US. You know, it's clear that the central bank's saying, look, we're going to do whatever it takes to get some growth happening here. So the outlook there, you know, we don't know whether they're going to be successful, but certainly, you know, risks of a double dip have diminished, you know, quite substantially over the last couple of months. So I think the global story is looking a bit better. You know, the inflation numbers, does that mean that the RBA has a reason to sort of hold off? At JP Morgan, we don't think so. We think they're going to deliver a rate hike this afternoon, and the main reason is basically that, you know, policy is all about the medium-term inflation outlook. It's not about what happened in the past 3 months. It's all about what's happening over the next 12 to 18 months. And on that metric, when we look at, you know, above trend growth forecast next year, an investment boom, etc., all the things we know so well about the Australian economy, it's pretty clear that there's not a lot of downside left for the inflation story. So we think on that basis that merits a rate hike, and that's what we're expecting this afternoon.
Stephen, and then that feeds through into Friday's growth projections for our economy. On that measure, from Sally's perspective, they won't be revising down then. If they hike, they're effectively saying growth's on track, therefore we won't go backwards with our revisions.
I imagine, look, there could be a small downward revision in inflation forecast. I think that's reasonable given what data we've got already.
Well, how does that then match with them hiking today? Even if there's a small downward revision, that's counter to raising today.
I think it's going to be a close call. Right. I mean, one rate hike is going to be turbocharged by the banks, so it's going to have quite a bit of an impact if they go now. They've got the problem for the bank is, I suppose, if they don't go now, that they're going to have to wait a long time. So they did say it was a close call, and it is a possibility today. Yeah.
Stephen, thank you so much for your time from FIG once again. Carson with me in studio as well, and Sally Old from JP Morgan. Thanks, Sally. Have a great day.
Thank you.